Oh, awesome. All right, so hey everybody, thanks so much for tuning in to Young Money Investments. My name is Cameron Bennion, and today, Sunday, so we are going to get everything kind of rolling with a new segment that we're going to call Sunday Plays of the Week. So this is where I kind of want to break down and kind of go over a few companies that I am potentially investing in this week or already have plans to buy in, or I bought it on Friday. So full disclosure, I'll kind of go over all those things with you guys and kind of let you know which ones I'm already in, which ones I have buy positions on, which ones I'm kind of waiting for, and that kind of thing like that. Um, but what I would like to do is kind of get jumping into this because this is going to take a little bit longer to kind of break down everything. I'm sorry I'm getting this video up later. I want to start doing a Sunday stock video where I can kind of get it out earlier on in the afternoon on a Sunday just because I know a lot of you guys get busy at night. Everyone's schedule is different. You probably are spending it with family and that kind of thing. So I was out at Yellowstone and everything today. Maybe what I'll do is I'll link some videos and everything kind of in the, maybe at the end of the video, I'll maybe upload and edit a few of those in. But I got a friend that's here from the Philippines and everything like that. And so I have kind of a lot going on right now. It's fun getting to hang out and do different stuff with him. But we went up to Yellowstone and things like that. Went out to Mesa Falls and some other cool areas. So um, let's jump into the video and everything like that and get going on a few companies that I think are really important to maybe take a look at, because the reality is this week stocks have had these massive sell-offs and companies are way oversold, way oversold. Like, there are so many good buys, and almost most of the stocks that I'm going to talk about today are big household everyday names that have just had a nice Black Friday sale. I mean, literally on sale massive amounts, and they offer great buying potential and great buying opportunities. So we'll roll into that really quick and get going. So the first company that I'm going to talk about here is one that I kind of have seen this really interesting play with and kind of interesting pattern with it. And that is going to be Oracle. So most of you guys have probably heard of Oracle and everything like that. Oracle makes a lot of software and things like that. As far as business communications and things like that go. So Oracle has had a very consistent channel pattern. If you watch it and everything right through here, you'll notice that it's very consistent. Yes, it has peaks right here, comes down. It did not consolidate or be able to break above this trend line that I've kind of drawn in here. It did have another sell-off, broke below a little bit, had quite a bit of sell-off right here, and then obviously kind of had that run up, came back down, back and forth, back and forth. And with earnings is what really was the catalyst and everything behind what happened over here. Yeah, you're welcome to come in if you want. You can come in. You can totally come in if you want to watch this. I got my friend here and everything, so you can even get in on the video. You don't have to like be shy or anything. So basically what you're going to see here is you're going to see this massive sell-off right here around earnings. So these little symbols and everything here on the Thinkorswim platform show earnings and everything like that. If you notice, it had that massive sell-off, and then it has continued because we've had a lot of bad market news and everything right now, bringing it down to lows that we haven't seen in the 180-day chart here. So this is 180 days. But what this really does is it offers massive buying opportunity, because really there's not a lot of reason for all this. If you notice, after every earnings season or every earnings report, what happens? Massive slide off, massive sell every single time. Volume is high, lots of selling. Again, earnings report came out, massive slide coming down here to this trend line and everything like that. And then what happens? It starts to pick back up right around the basically when the quarter starts. So that's something that I've kind of taken notice of, and I've also taken notice of how long it takes to go from a peak to a valley. So if you notice right here, if you take it from a peak and drag it over here to kind of where it had a valley, that's about 20, it says about 20 days. I don't know if you can see that. There you go, 20 days right there till it had like the low was about 20 to 25 days. Again, if you want to take another one, you can take the peak right here and write it to the sell-off again. You're looking at about 37 days. This one was a little bit longer. If you do take this peak though, I'm trying to go peak to valley, you're looking at about 15, 17, 18 days. So, I mean, if you do go 20, you do see it to start picking up a little bit here. But if you do notice from peak to Valley is about 16 to 25 days is kind of what I've gathered here. 26 to 28 has been fairly common. I mean, if you take it from here, peak to Valley, that's 30 days. So anywhere between, I would say, 18 to 30 days is probably a fair analysis for every single one of these. Again, peak to Valley, 33 days. So again, I mean, if you go 18 to 30 days, you're pretty consistent in seeing this up and down chart pattern. You've seen the SMA has acted as resistance and everything like that through some of the downturns and everything like that. That's something to watch out for and everything through here. If you want to buy on the dip, you're more than welcome to buy down here. The problem with buying down here, it does offer 4.72% potential for profit. I think that's great, especially if you're able to even ride it up into here. You're looking at 6.89, almost 7%. If you ride it all the way up to here, which I think is a great position and a play, you're looking at about 14% potential for profit in about a 20 to 30 day range, which to me, if I can be making a 15% profit in 20 days, that's pretty dang good, especially if I have multiple positions and I'm making about 1% a day. That is a great opportunity that I see, at least. So Oracle is one of those great ones. I just want to kind of call out that chart pattern, how I've noticed anywhere between that, like I said, 18 to 20 day range. On here I wrote down 26 to 28 day pattern for the cycle, but you can kind of notice it as well here on the MACD and everything. But if you look on the RSI indicator here, it's indicating that it's way oversold. And every time it's been way oversold, you're looking at a low. Again, you're looking at an oversold pattern here on the RSI, low. Low pattern right here on the RSI, it was oversold, and then it ended up coming back up, and you notice it was overbought and everything. Great chart pattern. Oracle is one of those great ones that I really wanted everyone to kind of take a look at. Next one on the list is going to be OLED. This is one that I'm still in, still see a great chart pattern. It had a little bit of a run up. I ended up selling out. So we'll actually zoom in close on this one. If you'll notice, I ended up buying in when it touched the trend line, rode it up for about an 8% gain, touched the EMA line, I ended up selling out. Took about I want to say I took about a $700 profit on this, which was a great little play. It has again came down, broke through the trend line that I've drawn, and I'm going to be using that EMA line probably as a little bit of resistance as well. If you're looking for this for less than a day trade, this company has probably some of the largest potential for profit. And I see, because it is down here in my paper trading account, I'm going to be buying another 200 shares of OLED on Monday at market open. So if you ride it from here to here, you're looking at about 23% return. I would say the next level of resistance is going to be somewhere right in here, which is about 32% potential for profit. And if you ride it all the way up to the top, I mean, you're looking at a 47% potential for profit. So OLED is a great company that, like I said, I see quite a bit of value in. I'm not going to ride it all the way up here. That's just the honest to goodness truth. But I do see buying in here, at least riding it into this section right here. If I do notice some sell-off and everything like that, I'm going to cut my lot or cut my profits, take my profits and run, and look at about a 16 to 19% return on that investment. Once it breaks above this trend line and everything right here, I plan on buying back in and being able to ride it up to somewhere in here. So again, if you end up buying in here and riding it up to somewhere right in here, again, you're looking at another 16.38% profit and everything. So it will depend, and it'll depend on what I sell, depending on how it rides with this EMA, because this EMA line is crucial in, sorry, I got a text message here, is crucial in kind of playing these shorter term trades. Next one that we're going to be looking at here is FDX, which is FedEx. Now, I got this one from a friend, Rhett. He recently day traded it, I think, or held it overnight, and made a small percent profit on it. And so it got me looking at FedEx. FedEx is another one that has had massive sell-offs and everything right here at earnings. If you notice during earnings and things like that, it had some consolidation last time. It didn't affect it. But what was different here at this time and why we had this sell-off is because we've had that pullback in the economy and everything. Pulled back here, we're not looking at a huge massive increase like we did with OLED, but if you notice, this has acted right here at about $229. It's acted as support and everything for this. Resistance is sitting right here about 250. So I plan on buying right here, as you can see in my paper trading account. I'm buying 100 shares of FedEx at market open as well. and that will be a ride of about 8.95. I'd say I'll take probably 8% profit on that and end up selling out. It has a good, consistent, solid uptrend. FedEx is a great company. As more and more people tend to shop online, FedEx is going to continue to have a great business model and things like that. But if you also notice, again, massively oversold. Anytime it has dipped massively, you look down here on the RSI indicator and you're looking at massively oversold positions and everything. So great chart pattern again. Love FedEx. It is a little expensive at $250 a share. I know most people probably would not be able to buy 100 shares of FedEx and everything. So if it's a little bit expensive for your taste, I understand. But I like buying and being able to swing trade these massive companies for the simple fact that massive companies, if for some reason your chart pattern's off, for some reason you do wrong research and it doesn't work out, the likelihood of these companies crashing or really being garbage in a year are slim to none. They're multi-billion-dollar, large cap, blue chip companies that are going to make you more money in the long term. Now, is it cost effective usually to leave your money in it long term? No, that's why I'm swing trading it. But for the example of you don't want to sell for a loss, let's say FedEx does end up coming down here and you accidentally bought here. What's going to happen is you can hold it if you don't want to cut your losses and you don't feel comfortable enough in yourself being able to, in that same amount of time, cut losses and then make back your losses plus profit. Hold on to it. And that's one thing as a beginner, as a strategist, you can kind of take into play because FedEx is a large cap company. So again, FedEx should be a nice little 9% play, 9% play. Next one we're going to look at is Tesla. So everyone should probably know by now if you've been following my channel. Tesla was the company that I was going to take a $50,000 position in, and I had I averaged in to about 23,000 for quite some time, probably up in here about the 309, 312 region. And I recently filled that $50,000 position, buying in right down here at about $300. So I called this out over a week ago, back when it was up here at like probably 320-ish or something. And maybe it was even higher. I honestly want to say it could have been up here in the 330s. Like it was high. Maybe I'm wrong. Let me look at my time frame here. 6 days. No, it definitely, I mean, it probably was. It was probably close to that. I mean, it was either high 20s, low 30s that I had called this out, and I said I was going to buy between 315 and 305. I said I'm going to ride the dip up. I'm going to buy in, and I'm going to ride it up from the dip, hopefully being able to break through this level of resistance right here and being able to ride it up somewhere right in this region. So ride it up to about 340 is going to be my sellout position. But that's the great thing. So I'm average costed in right around let's call it 310-ish, 309, whatever, 310. I ride it up to this point here. I'm looking about a 10.85. I'm probably going to ride it up to 11 just to be safe, just to be confident. I mean, that's where I see a lot of resistance and everything is right around that price point. Although I have seen a lot where it has gone all the way up to about 350, 360. So just to be on the safe side, I'm going to take about a 12% profit gain on that. 12% of 50,000. That's a nice return. That's a really, really nice return, to be honest with you. So, and again, large cap, multi-billion-dollar company. I see value in this company long term, and I am buying it at a great price. I'm going to buy an additional 60 shares in my paper trading account. That's the other thing I really want to point out with a lot of you guys is just because I'm good at this does not mean that I'm not refining and bettering my skills and everything like that. So I am still trying to get better, and I'm still paper trading because it does help me bet a little bit riskier, play a little bit riskier. Never would I market buy on the weekend on a company like this because I have no idea what the market's going to do. And so in my personal account, I am not going to buy these stocks unless the market is open. But on my paper trading account, if I lose a percent here or win a percent here because I was a little bit more ballsy on my play, it's just different. It's paper money. It's not real. But on my real account, I never would market buy. But I do want to kind of have similar positions in my paper trading account as I do in my real account. So Tesla is another great one. Like I said, that's kind of the plan. That's kind of the position and everything. Again, you can look at the RSI indicators, oversold, MACD showing oversold. Volume has not really moved in. You saw quite a bit of volume on this massive sell-off, but volume is very consistent. It's Tesla. There are big businesses that are in Tesla, and it's not a super volatile company. Maybe I'm wrong. Maybe it will sell off more, but great. I mean, I'm just going to continue to average cost in because, like I said, Tesla has not had anything outstanding that has really changed the company. we just had a really bad past week in the markets, and Tesla shows a very consistent horizontal pattern, and you're buying on that dip. Next one we're going to look at is Facebook. So Facebook has had a massive sell-off. I'm actually down a little bit in this because I ended up buying right here at about, actually I want to say I'm average costed in right here at 165, which isn't smart. I mean, really, honestly and truly, this was kind of a bad play, but I'm not down very much. I want to say I'm down like $400 or $500 on the position. And with the amount of money that I have in it, which we're not going to get into, but with the amount I have in Facebook, it definitely, as I buy more down here, which I take that back. I'm not going to end up buying down here, but I will probably buy in a little bit more around the 162 price range, ride this up to about here, and again, it's another 6 or 7% potential for profit. You ride it up to the place that it was a few weeks ago, you're looking at 20% on Facebook. Again, I'm long on Facebook. I would hold Facebook in my long portfolio with $20,000 or $30,000 in a Facebook position. The bad news that has came out about Facebook is bad, just that. It's just some bad news. It's not going to affect the amount of subscribers. It's not going to affect the amount of people that are using Facebook and everything like that. And so the great thing about Facebook is, heck, you could buy down here. If you want, buy in on Facebook right down here. You buy in at 158, you're looking at a run up of almost, well, that can't be right. You're looking at a run up of about 22.5%. And that's just to get back to where it was at highs of about, how long ago was that? 50 days ago. So 2 months, less than 2 months. Less than 2 months ago, that's where it was at. So honestly and truly, I like Facebook for a long play. I'm going to swing trade it though. That's kind of my goal. I'm leveraging more money in my account right now because of the sell-off and because it's just been a great buying opportunity. So I don't have enough cash and I don't like to be long or to be leveraged out for a long-term position. I just leverage in for swing trades that I really see great value in. Next one we're going to look at here is, we already looked at Oracle. Twitter's another great one. TWTR is Twitter. I have a market buy recommendation right now. This is going to alert me. I'm buying 400 shares right now in my paper trading account. Doesn't matter what's going to happen and everything because it's my paper trading account. I could blow up the whole account. It doesn't matter to me. I'm seeing a very cylindrical, this pattern right here where it's a shoot pattern and an ascending pattern. If you take a look at everything in this chart pattern, it's used this line of support as resistance, right? It came up here, it hit the EMA line, and it trended back down. So you're going to have to watch out for the EMA line and for it basically causing some resistance, especially because it is outside of the shoot now, where it could end up consolidating along this line right here at about $30. But with the last pattern that's been going on and everything over the past 180 days with Twitter, you've seen this massive, consistent, solid uptrend and everything. So I see it being able, even if I buy right here, my buy recommendation or my reminder for myself when I'm going to come back and revisit the stock is set at 32.16. So if you buy in at 32.16 and even ride it up to where it was at previously, of previous highs, you're looking about a gain of 13%. So you got to ask yourself, 13%, I think that is a great, great potential for profit, especially because it does have an ascending uptrend pattern. You also can take a look at right here, again, MACD indicators oversold, or sorry, RSI indicators are oversold. Massive volume going on right here around earnings and everything. That's when it had its massive spike. But I just see consistent solid growth in Twitter. Next one we're going to talk about really quickly. I'm trying to keep this really quick for you. Gosh, this is going to be an ETF. Massive, 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 massive potentials and everything in this one. So if you look at from this trend line all the way up to its peak, you're looking at about a gain of about 86%. Massive gain. This tends to move a lot slower. I mean, although honestly and truly, from the height to the bottom, you're looking at 84 days. 84 days to make 84%. I mean, sign me up. 1% every day. I mean, that's a plus if you have multiple positions. I mean, I would take 1% a day on any given trade. I mean, that's just the reality of how I do things. So, anyways, you're seeing some resistance and everything coming on up here. This has been a great support and resistance line for months past. When you look at how long this has been going on, this is about 185 days actually that, yeah, 185 days that this pattern has been going on. So you look right here, consolidation, didn't want to break above this trend line right here. It's used it as support as it had broke above. consolidated, and then got into this shoot pattern. Well, it had some sell-off and everything like that, consolidated, broke below the SMA, used that as resistance, actually could not break above the SMA, and that is where it has consistently trended to come down here. Right now, where I'm seeing it at, I'm not seeing a great buy opportunity. I mean, this does have potential at 12.44%. It's very volatile day to day, and where it's had this very consistent uptrend pattern, I want to see if from here to here, which is actually 4.48%, it'll move 5% in the day. I want to essentially be able to play this a little bit different. I want to see if it hits resistance and has a little bit of a sell-off. If it does end up breaking above and it's able to break kind of this consolidation or this resistance right in here, breaks above 26.25, I see potential for profit of 20% or more. I mean, 20 to 30%. So I am setting an alert. I'm not going to buy in or anything like that in Gush right now. I'm going to kind of wait and see what happens as it reaches the SMA, as well as this trend line right here at about 24.59. Last play that I'm already in right now is JDST. JDST, it's a gold-based ETF. I have 300 shares that I'm going to be market buying in at the opening bell in my paper trading account. I see that it's kind of consolidating right down here. You can see this has acted as very good support for quite some time. Now, granted, it has had an additional sell-off, and so in my personal account, I am holding it right now, and I held it over the weekend. I bought it on Friday. I think I bought it kind of on a dip, and I think I made maybe $200 or $300 on it. Very small profits. I should have sold. If I was doing this again, I probably would sell and wait to do anything after the markets open Monday. But what happens is if it is able to end up holding right here on this trend line right here as support, like I've seen it do over the past couple of days, I do see it being able to ride up into at least right into this area, which again offers a nice little return of about 11.95%. Even if we ride it up to the EMA line, which should continue to increase, basically we'd be looking at, again, about, well, it hit at about 11.28%. So 11 to 12% profit on that. That is essentially everything that I kind of wanted to go over today. I know I went over everything super fast with you guys. But the purpose of that is kind of to keep this video short. 22 minutes is a long time. That's a lot of plays. That's 8 stocks to kind of talk about for the coming week. But with the market selling off, this is a great time to buy. Now, don't buy because I'm telling you to do it, because I believe in it. Like I said, I mean, what I'm personally doing and the amount of money I've put in the market just in the past 2 days, or basically Thursday, Friday, is kind of, I'm putting my money where my mouth is. I definitely believe that this is just one of those, another geopolitical storm that gives stocks a reason to kind of come back down in value a little bit. But again, the stimulus plan is helping. There's so much more money that has stimulated the economy. Facebook, it's gonna be a $1 trillion company one day. I mean, these companies that we're swing trading are companies that I would long-term invest in. And so in other people's portfolios, like my mom's, she's going to be ending up doing a lot of these, buying some of these companies, and doing it as a long-term investment, because this is a sale. This is a sale. It's going to help out to average cost down some of her positions. Google's another good one to maybe long-term invest in if you're looking to do long-term trades. I know it's $1,000 a share, which is expensive for a lot of you, but anyway, that's what I wanted to go over and everything like that. Hope you guys are having a great day. I hope this Sunday plays, or Sunday stock plays of the week, are going to help out. Like I said, I'm going to try and do this video on a consistent weekly basis to call them out. And as we go through the week, we'll kind of go back and revisit these companies and see how they're doing. That way you can, A, build up confidence in the patterns that we're calling out, B, build in confidence and kind of see how your thoughts kind of were Sunday and what's going on in the week. And hopefully teach you guys to be better traders. So if you have any questions, again, please leave the comments in the comment section below. If you have, I don't know, if you like the video, please give it a thumbs up. If you don't like it, give it a thumbs down. I'm totally fine with that too. And the last thing I think I was going to say is please don't forget to subscribe. These plays and these calls are great. I mean, they're important. I mean, if you spent 22 minutes watching my video, I think you're pretty invested in stocks. And so I want to be able to help you out. I'm here to, while I'm small and while the channel's small, help out, especially a lot of you guys individually, a little bit more. Whereas if and when the channel does happen to get a little bit bigger, my time is going to shrink when it comes to those things, especially as the summer approaches and some of my other businesses and things like that end up happening and everything like that. I'm not going to have as much time to kind of talk to everyone about these things. So hope you guys have a great day. I hope you've enjoyed the video, and thank you so much for tuning into Young Money Investments, and I hope you guys make it a great week. So talk to y'all later. Bye.